nobody says no to you, but absolutely nobody has said yes either.
It's the Canadian no.
The Canadian no.
Hello and welcome to another episode of the BetaKit Podcast. I am Douglas Saltis, Editor-in-Chief of BetaKit, and along with my co-host, Rob Kennedy, we're live in Ottawa for SAAS North, doing a live podcast in front of real people. You're going to enjoy this one. Lots of really great questions from amazing speakers at SAAS North, and then our wonderful audience who showed up in person at 7:30 in the goddamn morning to listen to us do it for the pod. So let's dig in. It's going to be just three crotchety old white guys. Who could we get to represent that energy? And we thought, who else but Ottawa's native son, Matt Roberts. So please give him a warm round of applause because he didn't have to be here and he showed up. But you should also give yourselves a warm round of applause because you didn't have to be here either. And this episode, yes, let's do it. This is a little different from our normal podcast. You might guess we don't normally book out a room to do a podcast for two reasons. One, you're here with us so early in the morning to podcast. But then two, this is like an AMA edition of our normal podcast, which means like we're here for you. You're going to grill us with questions about Canadian tech or any other kind of tech question. And we're going to do our best on like a coffee and a half to answer them. Now, we've also been asking some of the speakers around SAAS North for some questions, just in case, you know, your brain hasn't kicked in yet. You're still like consuming the wonderful breakfast provided by the SAAS North team. So we have a few that we're going to go through. So let's get into these questions. And Jiminy Christmas, Oh, okay. This is an easy one. So thank you, Slido. This is why
thank you, Anonymous.
The last AMA we did was actually live streamed on LinkedIn, and I think we were kind of emboldened by the energy of having a live audience. But normally we just get a bunch of pre-submitted questions, and they're usually like master thesis, PhD level, super stressing us out. This is the easiest question we've ever been asked. Will the Senators win the Stanley Cup? Absolutely fucking not. And I say that I am not some outsider. I began my career in tech in Ottawa. I lived here for 8 years. I have stood at City Hall when they put the giant screens up there, and we all stood in a crowd watching and hoping. And it didn't happen. So no, they're not going to win the Stanley Cup. Absolutely not. Speaking of winning, we got this question in from Danny at Captivate FM. And he asked, will there ever be another BlackBerry level success story, parentheses, before it all went pear-shaped, by a Canadian tech company? And if so, who do we have our eyes on? Now, another disclosure, not only did I live in Ottawa, I also worked for Research in Motion, BlackBerry for some time. So I have some thoughts, and I actually did some research because I'm a professional. But Matt, you're an old tech guy and an Ottawa dude. Ottawa having a strong relationship to RIM and BlackBerry here for several years. What are your thoughts? Are we going to see another?
Absolutely. We will see another one.
When? Before the Sens win the Stanley Cup?
Well, the Sens are going to win a Stanley Cup, first of all.
Okay.
They're more likely to win one than...
more people applauded for me saying no than you saying yes.
None of these people are from Ottawa.
That's true.
I'm born and raised in Ottawa, so I am an Ottawa Sens fan. I grew up a Habs fan. As long as it's not Toronto, I'm happy. But I know there's a lot of Toronto people here in the room. There's a groan here.
So... we're trying to serve.
This is the controversial part of the podcast, apparently.
This is where I get canceled.
Answer the question. Who's it going to be?
When are the Suns going to win?
No. The next BlackBerry.
We're on the next question.
So if you look at the Canadian tech cycle, if you want to go like historical, right? People sort of forget, like they look at BlackBerry and that's the sort of the zeitgeist of one that peaked, failed, and you have Shopify, which people are worrying that might be a similar sort of storyline. I don't believe that necessarily, but that's what they believe.
Toby, come on the podcast.
Toby's down the street. Go to his house.
He was not willing to get up at this early in the morning to podcast with us.
And then if you go before BlackBerry, then there was sort of the Newbridge Network period, right? And
shout out Leo Lax,
and Terry Matthews. And if you look at the period before that, there was sort of the Mitels or the Corrells. You know, like went back in the period before that. We have cycles and waves, and they sort of work within the macroeconomic environment, and we're coming off a peak of a macroeconomic environment.
I'll say
we're all feeling it, and I think you're going to see the next. We don't know what that next company is ever going to be. But when I went to my first real VC conference back in 2010, the conversation was which will or 2000, pardon me, which will be the next $1 billion new bridge. I remember hearing that storyline at the venture capital conference, and then 10 years later it was which will be the next BlackBerry, and then it was like, when are we going to find the next Shopify? I think we have a little bit of a worry that we're not going to find these things. They're being built here. Entrepreneurs are resilient. They'll figure it out, and people like me will hopefully get a chance to invest in them.
But they're also not sustaining, right? We keep having, like, every generation asks about the prior generation's company. If you go one further generation back, you're like, I've never heard of that. And just for context here, let's because obviously the closest that we've gotten to BlackBerry is Shopify. But I would just want to set some peaks here in reference. So in 2009, at its peak, RIM did about $20 billion in revenue. In 2011, the year that I left the company, right before the massive layoffs, we had about 20,000 employees. Now that's something where I think RIM 3 years prior was like 10,000. Those extra 10,000 employees were added over a course of 3 years. We just grew horizontally. It was an absolute mess. And then everyone was canned. And at its peak in 2007, they were popping off about $241 a share, which again, adjusts for inflation there. Shopify at its peak, which was last year, which it's not currently peaking at, did about $4.6 billion in revenue, which is about a Twitter of annual revenue, or a pre-Elon Twitter in revenue. And as of this year, prior to the layoffs that they just laid off 10% of the company, 10,000 employees. Their share price peaked last year about $213 a share and has not gotten anywhere close since. So
but is the question about revenue, or is the question about game-changing tech companies in Canada?
I'd also be talking about gross margins here, like like $50 of like 50% of like the revenues that you were seeing at RIM with hardware, right? So it was not necessarily commensurate with how much sheer cash flow is flowing through the business, right?
I agree, but I feel like if we're going to talk about BlackBerry level success stories, you got to get on BlackBerry's level. If the Black Eyed Peas are doing commercials for you, then you know that you are the next BlackBerry. But Rob, do you have a different one?
No, I actually agree with Matt. I just think that I think the question's more like, are we having like market-making Canadian technology companies that change the ecosystem, that build wealth into the ecosystem? So I would agree with Matt, and I would say that I think we're going to get, maybe not, who knows what the numbers will be, but I mean, there's companies, including some in this room, wink, who have the potential to be those kinds of companies. And I think it won't be just one. I think there's a potential for a whole bunch of them because they're not hardware companies. Actually, it's probably easier to build multiple SaaS companies. And we've had amazing exits over the last 10 years, which a lot of those folks are not just like buying boats and sailing off to the Bahamas. They're entrepreneurs reinvesting into the ecosystem, building the next versions of their companies with less risk. So I think that I take the question to mean, are we going to have those kinds of companies, like really big companies that we would all be proud of? And I think the answer is multiple.
Will it happen this decade?
Yeah. Okay. Absolutely.
Great. A little positivity.
Not 2023. How's that?
Okay, not
2023. No.
2020. 2025. Every company's got 2 years worth of runway right now if they're smart. But I also like the fact that we normally wink at our audience when we're recording, but they can't see it. We literally just winked at our audience.
Right.
This is
but
the
nobody
most
winked back,
meta
which was the weird
podcast
part
ever. And it's encouraging me to go to some of the submitted questions. Thank you so much for doing this. But I think that top question, Matt, you were kind of references. What sectors are you looking at given the current macroeconomic conditions? Has anything changed? You're the only person with capital to deploy, I think. I'm not allowed to deploy capital. My director of ops doesn't let me spend money.
I have 1 Bitcoin. That's
great.
like 50.
Ride or die. So given the current macroeconomic conditions, what are you looking at? What are the boom sectors? What are the bust sectors?
So I'm a generalist. So I look at most software plays. It has not dramatically changed. I think I was having a conversation about this earlier. I think in the Canadian market, you're going to have a lot of difficulty with domestic crypto plays, or right.
You might see a story on BetaKit about that this week.
I probably will, I guess.
Yeah.
But there's a complete loss of appetite for allowing GPs to go and experiment in that space right now.
Mm-hmm. With fraud,
that might be the reason.
And Ponzi schemes,
that might be the reason too. We're in a weird place where LPs are questioning, and perhaps in good and bad ways, the decision making being done by their They're VC firms. And so you're going to see a sort of a flight to quality and a flight to very, very easily identifiable economic trends, like good economics in those businesses. You're not going to see people going into companies that only have 9 months of runway.
Gotcha. High margin, not growth at all costs kind of thing.
Yeah, those days are good. All progress is good progress is no longer the order of the day.
Okay. Let's flow into the next question, because this is kind of maybe correlated at the earlier stages. This is from Anonymous. Everyone's anonymous here. Hey, give us your name. We'll shout you out. It isn't easy to raise VC money right now, I'm told, from Anonymous. What other alternative ways of financing do you suggest for a startup wanting to grow and scale? I want to hear Matt's answer, but Rob, you've been exploring new company creation. You have run many a startup. We are trying to convince you to let us do a 40-year-old founder segment on BetaKit. How are you navigating this? Because as you build your plan, as you explore if this is something you want to do, building certain sectors, like what's your, because you're the dude right here. You're the common person looking to raise from people like Matt. What are you seeing out there?
Well, I think that if you it depends on where you're at. I think in the company building phase. So if you're super early, there are angels, seed stuff where you can quite easily, if you have a legitimate business, or at least a pretended or purported to be legitimate business, I think you can get capital that way. I've learned that there are other things that you can use, or other kinds of funding that will get you somewhere. But then if you're actually looking to raise VC, you might be putting off VCs later. So you have to be careful about the kinds of money you take early. Like crowdfunding can be useful, but it also can mess up your cap table. But I think so on the early stage, I think we're okay. In the very, 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 very early stage, I think we're okay for a while. But I think that anything beyond that gets a little tricky. I think that it seems to me, I'm waiting to hear what Matt has to say, but it's like everyone I know who's been raising anything is just running on fumes and trying to double down on those fumes so they don't have to go ask for any more capital, because they know what the answer is going to be and things are taking a really long time. People are interested and they're taking meetings, and then they're like, we'll call you in 6 months.
So your alternative financing is to not spend money.
Right.
Okay.
Basically.
That's a pretty good one.
That's a great.
If you don't spend money, you don't run out of money.
Right. Certainly not growth for no reason at all costs.
Yeah.
And that's pretty obvious. I think we've all heard the same message.
I would also say looking to make money is a really strong indicator. I know that's
a great alternative financing.
Yeah. Traditionally, and it sounds weird, but a lot of companies are often told or are afraid of making too much money too early, because it puts a numerical target on their back that might impact the valuations and the amounts of money that they're looking to raise on. But
there used to be a saying, which is like raise on potential or raise on traction, and anything else in the middle, you're totally screwed.
Yeah. But you know what's really cool? Logging into your bank account and seeing payroll for the next couple of months and knowing that you earned it. So not a venture-backed company at BetaKit. Matt, what are you telling early stage founders right now in terms of, or just anyone who maybe raised during the peak and they're just like, uh-oh.
So there's 2 points to that question. So if you're an early stage seed company in Canada right now, sadly, good luck. We went through a really weird time where angels and seed funds in Canada, or early stage funds, were willing to put out safes and not really be too concerned about who was coming in on the round with them. So they would issue you a safe. It would last you 2 or 3 months.
A simple agreement for future equity, I believe.
Yeah, or a convertible note, but very often it was a safe. And then they would say, okay, I know there'll be somebody in the next 3 months who will keep you alive in another safe, so I don't have to worry about a large round and 18 months of runway. They were very convinced that there was capital out there for you if you had progress. They're not doing that anymore. The early stage funds are trying to make sure that the companies that they finance do have visibility to an 18-month sort of time horizon, a 12 at minimum, but I think that's going away now. So you've got all these safe players who are willing to come in for $100,000 checks, but they're not large enough to constitute, leading around. So if you go around talking to entrepreneurs today, you're going to find that very often they're struggling to find somebody who will come in on their round, and they've got 4 or 5 people who said, well, when you get a lead, I'll join you.
When you find a lead, we'll join you.
Yeah, when you find a lead, then we'll join in on it. And so nobody says no to you, but absolutely nobody has said yes either.
It's the Canadian no.
The Canadian no. And so that's not great. And there's a lack of seed leads in the Canadian market right now. And then at the same time, if you've raised money during the crazy fun times that we've had over the last 2.5 years, so the Series A, Series B, Series C companies who've raised large amounts of money, I would say that your valuation is not what it was. You might be able to grow into your valuation, but we're about to go into what might be a very harsh and evil recession. And so with that in mind, you probably want to be thinking about having runway taking you into 2024, 2025. And with that, you start looking at your expenses.
Well, so that leads us maybe to one of our next submitted questions. And this is definitely a plant and maybe a little bit of a revenge play here by Laura Lenz, partner at Omer's Ventures. She wanted to ask us, and by us, I mean Matt specifically on stage in front of people, who's raising a secondary fund in Canada to go after all of these down rounds. There's going to be a lot of investors that cannot participate. So who's going to step up and step in?
Last time, so Canadian venture funds, when they're not doing well, or the GPs need to be removed for whatever reason,
because they invested in fraud or Ponzi schemes,
possibly, or the LPs have just lost confidence. Very often they'll start looking to sell the assets of the VC. It's uncommon in Canada. It's more common in the States and in Europe and in Asia. And there's been so much capital deployed in Canada over the past 10 years. It's surprising that you don't have LPs looking for more liquidity or forcing more liquidity on GPs who are underperforming. And there are people raising funds today. I don't think they're public, but they're trying desperately to find, these are large amounts of money, $500 billion amounts to go out and buy some of the funds that are having more difficulty out there right now. We've heard about lots of announcements recently by other funds that are trying to who are going to go raise, the Vicky dollars are coming online. Mm-hmm. Those people need to find liquidity in order to show to their LPs that they can drive liquidity. So they might be secondarying out their funds. So I think you're going to see some interesting, very inside baseball venture capital stuff, which is why Laura asked it. Me and her watched this happen when we were young analysts and associates together in the aughts, when a bunch of funds like Ventures West and GrowthWorks and things like that did not perform and failed. In came new capital, private equity capital, to buy these things out, and it released a lot of capital to sort of renew the venture market, because it brought money back to the LPs. So there's so much money out there deployed that money has to come back before we can have a regrowth of new venture capital dollars.
Can I ask a question that kind of staples the previous one and this one together? I'm curious. The narrative these days has been VCs have a lot of dry powder. And I think my take on it is that's bullshit. The dry powder that exists is to reinvest and follow on for existing investments that they make.
To continue to mark up their previous investments.
Right. And so if you're an entrepreneur who's like, I'm counting on dry powder for my seed or whatever, you're not going to get it. Is that your take on it as well? If whatever money exists in the fund is doubling down on the bets that they've made, or are you seeing
VCs are reevaluating their reserves?
Yeah.
We can't mark up our investments. We can't just keep making them go up.
It's a Ponzi scheme.
Yeah, that never happens.
No,
that never happens in Canadian tech or anyone else.
Write up your investments. You just can't do that. People try, they'd love to be able to do it, but you can't do it. But I think reserve discussions going into a recession happen all the time. So we all thought, hey, there's a guy named Tiger out there who's just doing
guy named Tiger, Johnny Tiger, just moving through the ecosystem. He used to
do cornflakes, and now he's doing this other thing.
Cousin to Johnny Appleseed.
Absolutely. And so there was always a belief last year that you were going to deploy your reserves much more quickly because you were having much more acceleration in follow-on rounds into your deals. That is not happening now. Now you're going to have to do protective investments into your existing companies to keep them going with runway over the next little while, or you're going to have to let them die.
Well, my follow-up...
Show's over. So thanks, everybody.
So my follow-up to Laura's questions are are we actually willing to let companies die in Canadian tech?
Yes.
Now? For the first time ever?
No. I think
for the first time since 2008?
I think when they were dying before, they were $5 million losses. right? We're going to see $100 million venture capital round funded companies like going missing in our ecosystem. We're going to see a lot of destruction of capital that's been invested. You're going to see a lot of VCs looking like they're idiots, which we're supposed to look like. But we've been able to sort of continue to find follow-on money to some of these deals, right? That's not going to happen anymore.
Hey founders, do you need help with your business? Well, thankfully, Caravel supports you through it all. From incorporating a new company to raising funds as you scale, all the way to successful exits. Caravel has been a leader in Canadian legal innovation for years, and their lawyers are trained at the best firms in Canada, meaning they have the experience you're looking for, but with a new and innovative business model and flexible rates that deliver excellent value. To learn more, visit caravellaw.com, that's Caravel law.com, or reach out to their client happiness specialist, Felicia, at info@caravellaw.com. Let's move on to the next question. I want to combine two questions. I believe that there was one from Anonymous, which is what's up with crypto? And there was a question from someone named Ryan that was effectively like, hey, do you think it's like weird that we're so conservative that every time there's like a small setback, we just pull away from a sector? Oh, do we, parentheses Canadians, hold ourselves back by being too cautious with all our investments after any setback? Example, crypto fraud. And I think those two questions are the bookend to a very interesting conversation of what's going on in this market. And we talked a little bit about the Canadian no, the Canadian, hey, please find us a lead. What about the Canadian, like, hey, maybe we don't want to invest in fraud? Those are two rational questions, I think, which is a reflection of the crypto market. Matt, you've been engaging in some schadenfreude on Twitter related to maybe funds that aren't yours and maybe things that they invested in that were not risky at all, according to those funds that have now just gone up in digital smoke. You can read more about that on BetaKit. Search teachers. What advice would you give to other VCs in the space who might have some crypto on their books, or maybe just like the average tech person who's still like looking to build Web3 innovation or stuff like this? Because those things are rational questions and they need to be reconciled or the universe will collapse in on itself. Like one's got to win at some point.
Really?
Yeah. It's like Ghostbusters. If you like, we're going to cross the streams of is crypto a giant mistake, or we just need to keep pushing forward, keep building. We're all going to make it. And one's going to win or the universe is going to die.
Yeah, so two Canadian firms, I think it was the CAS, CDPQ, and Teachers, both invested in, I'm doing this to bring everybody in the room up to speed.
I'm just been telling them to like click betakit.com stories.
You can go read it on BetaKit, but don't give Douglas money. And they both did investments in two separate firms that both ended up with big zeros underneath them. And I think both of those firms misunderstood the risks they were taking, both in terms of the amount of money like where these were in their cycle. They were very early stage, but they were investing it. They thought they were very sort of baked to some extent. And, CDPQ sort of understood that they were sort of investing in a hedge fund, and it went south. And then Teachers thought they were investing in an exchange, and there was no risk. There was tons of risk. I think that speaks something to, do Canadians hold themselves being too cautious? They were not cautious. They thought they didn't have to take any risk on this. I think that's the danger you have, is they were thinking that this was sort of a guaranteed up because they'd looked at the people who had invested before had done research. I'm not sure that when you put that much money into a new market that has yet to show any real business development, that there's an opportunity to make money with no risk. I think crypto, I've had this conversation with numerous VCs, including one that's looking at me.
Name him for our podcast listeners at home.
Ryan, what's it up?
Yeah,
Ryan,
exactly. It's Ryan.
and so Ryan's like heckling from the back almost, but he's sat in the front row to heckle. Should we invest? Should crypto be never invested in? Should we just write into our LPA agreements that we're not allowed to do crypto? I'm not so sure that's a good idea.
Should you write into your agreements that diligence should actually happen and you shouldn't rely upon other people to do it for you?
Surprisingly, that is actually in our LPAs, so we're okay on that one.
Some people are.
Some people might have an interpretation of what that is. I think there's a reevaluation of risk profile, and that's what's going on here. So when we pull back, it's like, what did we not understand about the risks we were taking when we put the money out there? And I think that's maybe Canadians do that more directly than our American counterparts. But there's also a sheer amount more capital down in the States, so it looks like they're taking more risk. I don't think they've got 30 or 40 times the amount of capital going out there. It may very well be that you'll see the numbers come down in the States as well. It's just that, on the whole, it looks like there's still more going on.
Rob, what's your take? I thought mine go
I think
up.
two things. One is like, yes, I mean, the teachers or whatever it was that invested in, I think they invested 96 million or something, and they're worth tens of billions of dollars. So, I mean, like, but I think we have to parse out the crypto part of the question to the Canadian risk part of the question. And what I'm actually worried about, you've talked about the crypto stuff. What my concern between the crypto and the recession, I really worry about a regression in a bit wanting to take risks in Canada. I mean, I've said this on every even number episode that we do, that any entrepreneur worth their salt isn't like, what are the Canadian investment community going to do? Because that's the startup I'm going to build. They're going to go find the capital that allows them to do. And it's especially now you can get capital from pretty much anywhere. So my fear is that, pardon my French here, but we're going to fuck ourselves by, I don't know if I want to invest in that company. And I'm like, and entrepreneurs in this room will be like, I'm going to go to San Francisco. I'm going to go to Portugal. I'm going to go to Africa and find the capital that I need to do the things that I need to do.
Where there's no regulation.
Well, yeah, that could be a useful facet, but I think that conflating crypto, I think crypto will freak people out, but I just think that I really hope we don't regress as a country with the investments that we make because we're scared of the recession and we're scared of crypto. That would really bite.
Every single time you see a peak and a trough, like there is a 18-month window where people sort of freeze, and figure out what they want to do. I think the Canadian market will be no different. I think the American market will do it as well. They're usually the quicker ones to turn around on the dime. I think within Canada, particularly around the crypto environment, it's just the regulatory questions still are never going to be solved.
No, I agree. That's why I wanted to separate out the crypto thing, because I still think I agree with the premise of the question. I think we're too conservative. We will be more conservative because of scary boogeyman.
Yeah. And there's tons of firms like whether Round 13 or Golden or others that are just, I would say consistently, not like epically dramatically investing in Web3. Like we're still covering that all the time.
It's a fun.
But I guess I would want to note here that a follow-up question I have is anyone going to get fired over these investments? Because this isn't just
Nobody fired over none.
Yeah, because the ones that we're talking about here weren't just, hey, this company didn't work out. It's like it went up in smoke because crimes were committed.
I think a different version of that question is those people won't get fired. Will they be able to raise more money again? Like, will people bet on them? Those people.
Where do pension funds get more money? Okay, let's go to a question from Megan Holstead. Thank you for putting your name. We appreciate that. Shout out to Megan. What are your thoughts on bootstrapping in Canada? When does it make sense? Well, I'm the expert on this question because we have bootstrapped the heck out of BetaKit Incorporated, which is a company I founded in February 16th, 2016. My thoughts are, if you enjoy control, if you are looking to build a business that is actually a business, not just an idea that might become a business after years and time and dollars spent to see if it's proven out, bootstrapping can be the way to go. It's also incredibly difficult to balance the immediate needs. Like when I say I log into our banking account, I'm not going to name them because they didn't sponsor this episode, and check to see if we have enough money for payroll. That's something that I did for years because I had to, because I didn't have 18 months of air cover to go to crypto conferences in Miami. So I would say it is the tougher road. It is absolutely the more tangible road. And I think we should have more companies proud of bootstrapping, more companies looking to bootstrap until they actually need money for a purpose to scale a successful business. Like look at 1Password had the biggest seed round of all time. It was like $100 bajillion because they were a successful business for 10 years. And then like, we want to go global. We want to do stuff with Ryan Reynolds. We need the money for that. That's very different than most founders who are dropping out of university to raise a round and thinking that that's what business is. But it is a struggle because you've got to fuel your growth from the money that you make. And that will recede your hairline and expand your waistline. So they don't get to answer. But they're going to help answer this question from Natalie Archibald. She's the VP of People and Employee Success at Clio, which is not only a Canadian unicorn, but a centaur. Those terms mean things. And if you don't know about them, you should go to BetaKit.com and read stories that we've written about Clio. And she asked this question when we were interviewing her yesterday. And this is a very people question, which I think is important because we've been talking about dollars, figures, numbers. And we this is a week, or I guess in the last 10 days, we've seen like 40 to 50,000 people laid off between Meta, Twitter, and Amazon. And I think we're running a story this morning about like 6 to 7 Canadian tech companies who have either been quietly or not so quietly laying people off right before the end of the year. Natalie's question is, what do you see as the hallmark features of organizations that have thrived or come out on top from the pandemic? Things that have helped them thrive and come out even better than they were pre-pandemic, either culturally or financially. And the culturally thing is important to me because we're seeing in real time very publicly what Elon Musk thinks of people and his employees.
It's the opposite of culture.
And we have, we mentioned Shopify earlier in the episode. We're in Ottawa. I would be remiss if I didn't mention the course correction that company's done on its culture and maybe what it cares about, and how that led to departures at the company. Matt, you're a VC that cares about numbers, but I think you care about people. No, I know you care about people. What would you say when you're looking at your portfolio of companies that are just struggling to like figure out the macroeconomic and when we raise in 18 months, like the people considerations? Because you've had companies recently that have had to go through multiple layoffs.
We've had RIFs, and almost, I'd say about 2/3 of my portfolio has done RIFs of at least 15%.
Which is like 5% over a really meaningful amount.
Yeah, and those are not easy. And in this macro, like the macro environment has changed so dramatically, so quickly that nobody, what we thought was a prudent move 6 months ago is looking like not enough today. And management is now having to reevaluate that. The best CEOs in our portfolio, err on the side of communication and transparency. The weaker ones seem to be a little bit more insular and unwilling to talk. And that breeds a culture of, fear by the employee base, who are concerned that they're not getting the information they need to get as they go. Everybody knows that open BetaKit, and you'll find, hey, things don't look good. But at the same time, culture got wrecked during COVID so dramatically, and the past 9 months, where I think a lot of CEOs thought they would be able to build back up culture, only to be kneecapped by the macroeconomic environment. So, what are the best companies doing? Communications, transparency. It's not the gift box you get when you join day one that makes a great culture. It's very much a senior leadership team that is answerable and open-minded, and then at the same time, actually, mid-level management is much more important than I think people are giving it credit for. We always talk about the CEO and communications. That's great. But we've had a massive, group of people who are being managers for the first time in these organizations, and they're struggling. And if you have strong support for those, mid-level first-time managers, you start to see that those companies are much healthier overall. Yeah.
Especially if they're working remotely, stuck in their home.
Yeah, I know.
Rob, you have shut down companies, you have exited companies, you've worked at companies you've hated, you've worked at companies you've loved. What's your perspective on this? Because again, on the odd numbered episodes, we talk about culture.
That's true.
Right?
I think the best companies actively cultivate and invest in culture. I think that it's been interesting, to your point about Matt, about how quickly things have changed. We had especially for the software development team, like the technical engineers, they've had infinite optionality. So they could be like, I don't like the person on the other hand side of that 2-dimensional screen. I'll just switch companies for $20,000 more, and nothing has changed except for the human on the other side of the picture on my wall. And for you don't get the stupid perks that you used to get in being in the office, like Google would give Kit Kats and stuff like that. That's not really culture. That's just a bribe, I think.
It's candy culture.
Exactly. So I think that those companies who actively invest in culture and think about communicating with their team and figuring out what makes a good company. I think we've covered on the podcast. We had like Wavy on that's sort of trying to innovate in remote culture. About a month ago, we had an interesting chap on the show who's a psychiatrist who said, what Salesforce has done. I thought this was just fascinating. Salesforce has a lot of real estate. What they did is they started buying resorts, and they started saying you can work from home, but the team hangouts are going to be in a resort down south. Now, I know we're not all Salesforce. We can't buy resorts or islands or anything like that. But the point simply is let's adapt to what the universe is throwing at us and actively cultivate the relationship with your team and make them feel like they belong. And I think in that case, you get stickiness because you're like, oh, these people give a shit about me as a human being. If money is a commodity, when times are good, that's what makes you sticky. And I think that as times get bad, if you feel like you're part of something and you're often there for mission-driven reasons, if you feel like you're a part of a team that gives a shit about you, I think you stick around.
Yeah, but also beware of the companies that talk about mission-driven reasons when they're honestly just interested in money.
That's the other thing, is that we've seen a lot of that, where it's like at the end of the day, they are companies. They need to make money, and they're not your family. Yeah. And if they say they're your family, be suspicious.
Yeah. Because you
can't break up with your family. Yeah.
But yeah, I just to close this up, again, we did an interview with Natalie. She has, again, she's asking a question that she's the person that should be answering this question. And we talked about it a lot, particularly in a remote environment. So check that out. It'll be live on the site. But then we're also following this episode next week. We're going to compile all those interviews into one collection piece and put it out on the BetaKit Podcast channel, which you can find by going to betakit.com/podcast. I think so. And you'll find all the links for your favorite channels. I think maybe the last thing I'll say is that culture happens before employees join, while they're there, and particularly as you offboard them in whatever way. And we've seen some really good examples, whether it's the Stripe CEO or even Zuckerberg treating people with dignity and respect. And then the exact opposite spectrum, or like off the friggin' grid, is Elon Musk. You do not want to be shit-talking employees who told you you're wrong about the company you've owned for 2 weeks on Twitter to millions of people. Do not be that person. Okay, we've got 2 minutes left, and you've asked a bunch of great questions. We're going to try and speed run through these. So we're going to go like tweet level answers. And a lot of them are like, hey, this all sounds depressing. Best advice for early stage companies. Hey, what's the most important success advice you would give to a new tech startup company? But what's a question you wish people asked you? That's for beers later. Meet up with the SAAS North people in the after party. General, please give us early stage advice. So give your the number one thing that when you see a bushy tailed, bright eyed founder coming in, going to make a dent in the universe, the first thing that you know that they have not learned yet that they're going to need to. What's the first thing? Step one.
They're going to spend a lot of time talking to customers that are not going to transact. Their goal is to find a customer. Before you come see me, find a customer. Before you build a product, find a customer. Before you talk to anyone else, find a customer. Talk to people who will buy something from you. Don't sell me your business, sell a customer, and that sells me your business.
Rob?
Just don't worry about all this bullshit. Start a company. To your point, Matt, just fucking don't worry about what investors think. Don't worry about what you want. Just build something that you have passion for, that you can stay resilient through all of this bullshit. When, in 5 minutes, crypto will be back and then it'll go away. Twitter will be gone. Who gives a shit? Life is long. We're at the beginning of a recession. Life is long. So just focus on what you're trying to do, and that will keep you resilient, because that's what really matters.
Should we all run to GoFundMe? No, because again, you are hoping for an outcome of just money dropping from the sky. Go run to where your friggin' customers are, sell them something, have them love you, and they will come back and keep paying you. And then you can hire more people.
Don't you have a GoFundMe?
No, we don't. We do have a Patreon account though. If you go to patreon.com/BetaKit, you can give us funds, which go entirely to our editorial products, just so we can hire more people, keep doing stuff like this. We've had so many huge features. We've broken tons of stories entirely because we had a budget to apply to that. And we offer a variety of swag and other rewards. So I suggest you check that out at patreon.com/BetaKit. Okay, we are now over time. David's going to come and kick us out. I just want to say thank you for doing this. Definitely, you can tell the coffee kicked in. This was an ungodly hour. Shout out to Megan to do a podcast, and it was actually really fun. I want to do this again. We would love to see you at other events. If you like this, tweet us at BetaKit, send us an email, leave a comment somewhere. Let us know what you want to see more of. We would love to give it to you. Thank you to the SAAS North team for letting us do this. Shout out to the production team back there for making us sound good. Shout out to Katie. I'm sure the volumes are all evenly leveled and you'll have no issue with this. Yeah, and if you like our stuff, share it out and support us, because we are a bootstrap business in Canadian tech trying to do it on our own. To just prove for the podcast listeners that there were people here and we weren't just like psychopathically talking to each other. All right. Okay. We're out. The BetaKit Podcast is produced by BetaKit Incorporated. It's edited by Katie Lohr, and its hosts are Rob Kennedy and me, Douglas Saltis. To learn more about how you can support this podcast, head to patreon.com/BetaKit.